For 30 years, Europe ran on a simple formula. America handled security. China powered growth. It was efficient, profitable, stable, until Ukraine, Huawei bans, and US tariffs. Now that model is under pressure. The problem isn't that Europe won't choose, it's that the rivalry between the United States and China is reshaping the global system, and the world may not give Europe the option to stay neutral. The pressure on Europe isn't emotional, it's structural. Economically, Europe is deeply intertwined with China. China is one of the European Union's largest trading partners. For countries like Germany, it has been a critical export market for years, especially for cars, machinery, and industrial goods. That's the growth side of the equation. But on security, Europe depends overwhelmingly on the United States. Through NATO, the United States provides much of Europe's military protection, from air defense to intelligence to logistics. When Russia invaded Ukraine, it was American military capacity that stabilized Europe's eastern flank. Here's the problem. Europe's prosperity leans toward China. Europe's security leans toward America. And as rivalry between Washington and Beijing intensifies, those two alignments begin to clash. Because rivalry changes incentives, the United States wants tighter alignment on technology, on supply chains, on export controls. China expects continued market access and economic partnership. Europe wants both, but as the world becomes more divided, having both becomes harder. And if you're finding this useful so far, don't forget to like the video and subscribe. I break down global economic shifts like this every week. Now here's where the pressure really starts to build. The first pressure point is technology. When European governments began restricting equipment from Huawei in their 5G networks, it wasn't just about telecom towers, it was about choosing sides. Then came semiconductor restrictions. The United States pushed limits on advanced chip exports to China. That directly affects European companies like ASML in the Netherlands. ASML builds the machines that produce the world's most advanced chips. China is a major customer, but the US wants tighter controls, so Europe faces a real choice: protect security ties with Washington or protect commercial ties with Beijing. And once technology systems begin separating, they don't easily reconnect. Different chips, different standards, different supply chains. That's how rivalry moves from politics into the structure of the global economy. The second pressure point is industry. Take electric vehicles, for example. China has built enormous EV production capacity. Companies like BYD are expanding rapidly. Chinese-made electric cars are entering European markets at lower prices. That creates pressure on European manufacturers, especially in countries like Germany, where the auto industry is central to the economy. Brussels responded with investigations into Chinese EV subsidies. Tariffs followed, but that creates another risk. China is also a major export market for European automakers. If trade tensions escalate, retaliation becomes possible. So Europe is caught again: protect domestic industry or preserve access to the Chinese market. At the same time, the United States is offering large subsidies for green manufacturing under the Inflation Reduction Act. European firms can receive generous incentives if they move production to America. So now Europe faces pressure from both sides: competition from China, incentives from the United States. That puts pressure on Europe's industry, and it forces difficult choices about where factories and future investment should go. European leaders often talk about self-reliance. The idea sounds simple: reduce dependence, build domestic capacity, act independently. But self-reliance is expensive. It means higher defense spending. It means investing in domestic technology. It means building alternative supply chains. It means accepting slower growth in the short term. And Europe doesn't start from a blank slate. Its security system is tied to the United States. Its export model is tied to global trade. Its industries are deeply integrated with China and America. Untangling that takes years, possibly decades. And during that transition, Europe remains exposed to pressure from both sides. So self-reliance is not just a political decision, it's an economic transformation. And transformation takes time. This moment is different, not just because of tension, but because of where things are heading. The world is becoming more divided. Trade is more political. Technology is more guarded. Security is more fragile. For Europe, that means harder choices. Which standards to follow? Which markets to protect? Which allies to lean on? It can't fully turn away from China, its industries are too connected. It can't distance itself from the United States, its security depends on it. So Europe is walking a narrow path, trying to protect its factories, its markets, its borders, but as rivalry deepens, that path gets tighter, and sooner or later, Europe may have to choose.